Thanks for joining us on Real Estate Insiders. I'm Danny Poulos with the elite lending team at Fenby Mortgage. Joining us now is Alfred Miller and Ray Sims. They're with the Capital Solutions Funding Group. And we're going to talk about a very interesting topic of unsecured small business lending. It's very that interesting. Tell us a little bit about what you do and how long you've been doing it.
Absolutely. We at Capital Solutions, we've been doing business lending since actually all the way back in 2006. And business lending for us is kind of the core of our economy, if you will, for what people are trying to achieve today. And it's kind of an interesting notion because most people believe that small business lending really doesn't exist anymore. For most people, because they look at it from a bank standpoint and they know that the criteria are so difficult and the hurdles are so hard that very often people just aren't getting involved in lending at all.
So how's it changed from the way it was, let's say 2005, 2004?
Sure. Back in 2005, 2004, lending was more open to the average individual. We all know that with the economy, banks have changed their standards. They've tightened some of the criteria. And what we've done is very unique in that marketplace is that we've opened back up small business lending to where it didn't exist previously to the average individual.
So tell us how they would do it before. They would go in Small Business Administration, I guess?
They would utilize either SBA loans, or if they had long-standing relationships with their bank or lending institution, often they could leverage those relationships and turn that into lending. Today, it's much different. The credit criteria is much more difficult for the average individual, and that's what kind of gave birth to our idea of hiring a consultancy agency like ourselves to go out on their behalf and secure the lending that they need when they need it.
So I think, would you say that people find out if they go into their local lender they were used to seeing that lender's hands are sort of tied in a lot of cases where they just can't meet the needs of what the client wants to do?
Exactly. And it's kind of unique because in today's society, whereas back in 2005, 2006, the average person who wanted to start a business did so not necessarily out of necessity. They did it more out of the reasoning that it was something that they wanted to do. They wanted to further their lives, kind of take control of their lives, if you will. Today, it's very different. We're finding the average individual that's coming through for us is someone who, quite honestly, it's a necessity. They need to start a business to supplement income, and quite often it's due to the job market and the current economic standing.
Right, so before it was just maybe an option that was out there that they might say, I've been meaning to do that or I want to try it. Now they're sort of getting pushed to it and say,
it's a definitive need.
That's where I'm going to find my income.
Absolutely.
So, okay, so we've established it's different than going to the bank now. What's going to make it easier for them to qualify when they come to you guys for that kind of financing?
Well, we've established a portfolio of lenders, which we've already established criteria for those lenders. So let me kind of give you an example. The average individual who may go into their bank and let's say they're trying to raise $100,000. To do that would require a stack of paperwork that would probably reach higher than the ceiling, right? For us, having a network of lenders, we don't expose any one lender to any large amount, typically $15,000 to $20,000. So we may utilize 4 or 5 different lenders inside of that portfolio. Now, where that helps our client is we're able to actually help clients secure lending based on credit score. Now, this is unsecured lending, so there's no liens whatsoever, no UCC filings. And these are no documentation, no verification loans. So they're going to state their income, and the primary goal that we have as far as that client meeting that criteria is just a minimum score of 680 with no derogatories on their credit report, and primarily credit usage to be in line, meaning that their credit isn't just maxed out on every single credit card that they have.
Now, you said something really important I don't want to go over lightly because Alfred was explaining to us before about back in 2005, 2004, that people were borrowing against security in their house, right? They owned homes and they had equity in, and that's where they would go for their resources. But these are unsecured. These are just based on the fact that someone's been paying their bills and has a history of paying their bills and their credit usage.
That is correct.
And a lot of times that's changed because of the fact that you see the properties now, they don't have the equity in them.
Yeah, and it was easy tapping them before, right? So now you got a situation where someone's continued to make their payments for that whole period of time. Maybe there are even people that went underwater on their homes, but you're taking a chance with them because no matter what, they've made their payments all along.
Correct.
So it reminds me of when we talk about just common sense underwriting.
Yeah.
Right, that's really what you guys are doing, right?
That's exactly it. That's exactly it. And really what we're doing is we're acting as that consultancy or advocate for the client to arrange that lending. So where the client today would have to go out and try to parse and put together these types of lending programs, what they're going to run into is the consistent roadblocks of paperwork and everything that's just required.
Well, they wouldn't even know about breaking it down into small fractions, as you call them.
Correct.
When borrowing, and then they would be doing separate applications, if they even knew that.
Correct.
They would be doing separate procedures with all different lenders and still have to figure out which lenders will do that.
Correct.
I mean, I can't even imagine someone
And
trying.
on top of that, how do you maintain the integrity of your credit report?
Right.
Because if the average individual went out and applied to 40 banks
That's
and
right.
had 40 different credit pulls on their credit report, obviously it's going to have a damaging effect on their credit. That's part of what we do is we help them manage their credit during the process
Gotcha.
of getting the lending that they need. And that's very important to manage that personal credit and business credit separately. And as it relates to real estate, it's interesting because real estate investors back in 2005, 2006 were just that. They were investors. They didn't necessarily view themselves as a, quote, corporate business.
Right.
Whereas today that climate has changed very differently, especially with tax laws and so forth. So when we're talking about unsecured lending as it relates to real estate, especially for the investor, these are true business loans in the advent of helping them create a better portfolio for their real estate business.
Now, when we talk about real estate and residential type lending, we know the one thing that's changed a lot is the documentation required.
Absolutely.
I mean, I've been doing it for 25 years, and it's gone like this between what's required and what you need to qualify. So another thing not to be taken lightly is that it's stated income loans. They're not documentation. You're not showing, 5 years worth of tax returns or...
Correct.
Right?
Yeah, we're not bringing tax returns. We're not bringing in third-party audited CPA records.
Right.
We're not bringing in, any of that material to the lending because the lending is based on your credit profile, and that's why that integrity of that credit profile has to be maintained throughout that entire underwriting period.
And we don't want people to think because we're using words like unsecured and undocumented that we're not talking about very high interest rate loans. We're still talking about a good borrower, like we said, no derogatory credit and a 680 credit score. So we don't want to give the impression that these are just risky borrowers who can't get money someplace else. That's not the case at all.
Correct. Not only are they not risky borrowers, but the interest rates that are associated to the loans are as competitive or more competitive than what they're typically going to find if they walk into their local branch.
Right. And they're done, as you've explained, as revolving lines.
That's correct.
Right. So if we touch on real estate a little bit, if someone's in the business of acquiring bank-owned properties or foreclosure sale properties and then renovating them for resale, this is like the most valuable tool they could have.
I'll tell you, and we've had such an outpouring from the investor real estate community in reference to this because it's one thing to acquire the property.
Right.
It's an entirely another thing to actually renovate, get it set to market, on the market, and sold. And so for the investor, as a scenario, if they go out and purchase a property, let's say it's $150,000, but they need $30,000 to actually renovate that property, to go back to the original lending institution that may have given you the note for $130,000 and say, I need an additional amount just to fix it up, it's not going to happen. That's where we come in. We can come in as that funding partner, if you will, to say, here's what we're going to do. We're going to lend you these funds for that purpose, and then as the client goes through, they rebuild or do whatever renovations that they need, sell the home, they repay the line is still open. They still have the ability to reuse those
So
funds.
anyone doing that kind of thing, you have to be a critical part of their business plan.
Absolutely.
I mean, that's something they have to have in place if they want to have the business perpetuate itself and go from one property to the next, unless they're holding a lot of cash,
Right.
or even if they are,
Sure.
Having a revolving line at those kind of rates and not have to go through the mill of the paperwork that normally would be required.
Right.
I would think that it's easy for you to find clients that need what you're providing.
Absolutely, and especially since, one, real estate investing in and of itself from a banking standpoint is difficult. Real estate, restaurants, there's certain niche markets that they just don't like to get involved with,
Right.
that we can have the client actually receive funds for. That's imperative, first of all. Second of all, what if they're brand new to real estate?
Right.
Could you imagine walking into your bank and saying, I've never bought an investment property before, but I'm going to take a shot with you?
Right.
Okay, we can actually do that for businesses outside of real estate, franchises, small business startups. These are our specialties. So even if you don't have the experience necessarily, that might be required by your lender to say, well, let's see if you've done this for a few years and let's see the P&Ls and the returns on what you've done. We can actually get that done from the start.
You know what? You bring up a very important point before we run out of time. If you're in the business of helping other people develop businesses or franchising kind of things,
Yes.
you're the type of person you want to have brought in from the beginning, because that's a service you're going to need to offer to the people that are trying to build their businesses, right? So that's a good market for you, I'll say.
And once again, maintaining that credit is going to be imperative to the starting of that business, because there's going to be other merchant accounts and things like that that they're going to have to acquire. So they can't just go out and utilize their credit and highly leverage it, and then all of a sudden their scores drop tremendously, because then they won't be able to fund the business in the later years.
Right, and the fact that you're spreading it out over a number of lenders rather than having max out one credit line.
Correct.
I mean, we all know that from being in the lending business.
And it allows them to manage their cash flow through multiple lenders.
That's unbelievable. All right, Alfred, Ray, tell people how they can reach you to learn more about what you do if they have any other questions.
Absolutely.
What's the best way to contact you?
Yeah, the best way to contact us is either you can phone us directly, and our toll-free number is 888-918-8840. I apologize.
That's all right.
Also, you can contact us directly through our website, which is www.mycapitalsolution.com.
Great.
And they can just click on, and if you have any questions, or you can certainly apply right there on the website, we're there to serve you.
Absolutely fantastic. Thanks so much for joining us today.
Absolutely.
This is great information.